Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start this morning's webinar, the Australian dollar didn't make any significant moves overnight and traded in a relatively sideways band within the parameters of 78.17 to 57. Looking ahead, the market will be keen to see the release of today's job data report and also the private sector data on business confidence. That's out at 11:30. At 1 p.m, the market will be waiting for the Chinese data on the third quarter GDP growth, along with reports on fixed asset investments and industrial productions. This could actually see a turn to the Aussie to a bearish case, which is the view I'm holding, especially with the technical implications supporting this as well. With 78.30 taken out earlier in the week, I'm now looking for a move down towards 77.80 with the objective holding towards 77.20 and reassess from there. Overnight, the European session started off slightly firmer for the euro as the market advances back to tackle the 118 handle. As it currently flirts with this level, I do expect to see any advances beyond 118.15 to be a potential sell zone around 118.50. Overall, I feel the dollar index still should see further gains as it currently holds above the 93 handle, with the immediate objective holding towards 93.80 after recently staging a high yesterday at 93.63. So the downside objective still holds to 117.25.35 to 116.80 and reassess from there. As you can see with the technical implications, does support this bearish case. Well, for those that have been trading dollar yen, would now either be square from the recent long position that was established around 111.60 with a 64 being low, purely for the fact is that the market now has taken out that resistance of 112.45.55 and overnight got to a high of 113.03. Now from a technical point, you can see the indicators are very strong. So at the moment, I'd rather wait to buy on dips as a strategy, even though that we could see further advances. The next target holds at 113.25.30. Now, a break above there would give further scope to the upside and bring in an immediate target of 114.05.15. Support on the day is seen at 112.45. The Great British Pound started slightly on the back foot yesterday, but soon gained momentum in front of the 131.2025 support after printing a low of 131.39. Now recovering back above the 132 handle, I do expect to see further gains and potentially higher towards 132.70.80 to 134. Reason behind this view is I still feel that the market will continue to price in a rate hike for November, especially after the Bank of England did say that inflation hasn't peaked yet, but coming in at 3% earlier in the week was the best number we've seen since 2012. So it's the fastest, should I say, rise in inflation since April 2012. Any pullbacks should find support at 131.60. Now the gold case is slightly on the negative side now after taking out the support of 1,281. The risk is from a technical point that we could see a further decline, now looking towards 12.76 to 12.70 before seen as a buy. What would turn this around is if we can get a break above 85. This could reinstate the upside to 90 and then on to 97 to 99. But in this case, it does look a little bit favourable from the technical point that we may see some weakness continuing. And to wrap up with oil, I'm still holding the bullish case, but I'm getting a little bit concerned that the technicals are not coming through as strong. Resistance holds at 52.65.70, with the base now seen at 51.50. Now, a slip underneath the 52 handle would give further concerns that the bullish case is failing and could see the bears increase in numbers and take the move down towards 51.5. So that wraps up my daily video. Thank you very much for joining me today, and I hope you have a wonderful day that's ahead.